What's good? It's your boy, Mr. Rushu, aka your favorite investor. And listen, today I'm back with my market predictions for the upcoming week. And listen, man, I told y'all last week that we had a huge data dump on Friday and that this information will be crucial to understand the direction of the markets, right? So we did get that information on Friday. And as luck would have it, the information directed that inflation is sticking around as all of the PCE data came in hotter than expected, seeing a 0.4% rise in the PCE index and a 0.2% increase in core PCE index. So as you can see, we got a lot to talk about. So let's get into it. Now, before we get into the video, be sure to hit that like button and subscribe so you don't miss any of the future content. We will be posting predictions weekly, so you don't want to miss it. Also, always keep in mind that none of the information given on this channel should be taken as financial advice. And should you need financial advice, please seek a financial advisor. This video is for entertainment purposes only. All right, so let's get back to last week's close and we'll start on SPY, right? Here we are, the SPY weekly chart. And just so we stay on topic, right, the overall market, you can see on the weekly, we had these three back-to-back rejection candles that I was telling you guys about last week that buyers aren't necessarily present in this zone, and it would probably be a good opportunity to start taking profits here. And as we close this week, you see this huge bearish candle basically putting us back into the 397 zone to 402, right? So the way that we closed on Friday, you can see it was a real nasty close. We ended lower on the week, pushing us down further, and it looks like we might still continue to drop. So that 411, 418 price zone ended up being super critical. We rejected off of it and bounced off. I wouldn't be surprised to see it keep on trailing down to the 380 zone, maybe down even into the low mid 375s, kind of like I was speaking about that last week. So let's talk about what happened, right? The PCE data dump on Friday literally told us and confirmed after a choppy week of action that inflation is still lingering, right? So the PCE index and core PCE index came in higher both year over year from that last reading base, right? So as we're looking at these numbers, you guys can see the PCE year over year expected was 5.3. We ended up getting 5.4. Core PCE year over year expected was 4.6. We ended up getting 4.7. And when you look at the PCE index and the core PCE, you can see they both came in at 0.6. One was expected to be at 0.2%, the other at 0.4%. So basically, you're seeing increases across the board, right? So let's just, for everybody that doesn't understand what the PCE index and the core PCE does. So when you're looking at these two indexes, these are two indexes that the Fed uses to basically track inflation, right? When you're looking at what these are actually doing, they're basically taking the price of all of the goods that we pay for, and it's a track on inflation, right? So if these indices are going up, then that means that inflation is going up. The core PCE excludes food and energy prices, as these tend to be more volatile. So the core PCE gives you a better read on what's actually going on with things that we buy every day, excluding food and energy. Now, as you can see, these numbers are going up. So where does that leave us, right? So let's start with the expected data this week. I don't foresee anything this week that is going to be a real market mover. But as we're looking at this, we do have on Monday, we have durable goods. On Tuesday, we have the Schiller Home Price Index for 20 cities. I'm assuming the top 20 cities in the U.S. On Wednesday, we have construction spending and manufacturing numbers coming in. And then on Thursday, we also have jobless claims, and Friday, we have ISM services. We also have a couple of Fed speakers throughout the week, but I really do expect the narrative to continue to be the same, as none of these events are really going to be market movers. We've already pretty much got the data that is telling us, hey, inflation is still up. We expect the Fed to increase rates still, and rate cuts are not on the horizon. So those are the things that we really need to be paying attention to. I don't think that news is going to alter the markets that much this week. So, I mean, that's pretty much where we are in terms of major economic news. So going back to the chart, though, I do believe, working with the narrative that we've been giving, we should be expecting the market to continue to slide on a full trading week. Yeah, I know that we had a short trading week last week. Markets weren't open on Monday. And I mean, call me crazy, but this level of SPY is actually sitting where I think that markets can rebound in the short term. And here's why, right? So I just want to show you some of my technical analysis that I have out. And when we look at this on the 30-minute chart and we go back and we look, I just want to zoom this out for y'all. You guys can see that this 393, 394 level has been a zone that we've bounced off of multiple times, had some huge uptrends that have sparked from there. We've also rejected it a couple of times. So I am expecting some buyers to come in this week. A very interesting thing on the 30-minute chart as well is we have this huge bullish engulfing candle here, basically wiping out that low. And this could be the start of a new uptrend. Now, I don't think that we bounce and go and start making new highs or anything like that. But it's very interesting what the market left behind, right? We have this gap fill here in between 400 and 398. Then we have another gap fill in between 406 and 404. So I am expecting those two to get filled at some point. I don't know if this level will cause that to happen, but it's very interesting that those two levels are there. Now, if that doesn't happen, going back to the daily, if we do end up continuing the slide, I do expect us to end up coming back down to this 388 zone. And if this 388 zone does not hold, I do expect us to end up coming back down and retracing to 376. So a couple of interesting points. I don't know if that happens this week. Could happen next week. I think it depends if anything else comes through. I am going with the sentiment that, things are looking pretty bearish right now. So I'm not expecting the overall market to continue moving up. We might have this little, gap fill here, but overall, this should be a zone where you guys are preparing to, button up some of your positions. Again, this is not financial advice. I'm just saying. Now, just because the overall market is slumping doesn't mean that there's no plays, right? Yeah, I know I'm always looking to see which markets might be on the potential move to bounce and what's going on. So, yeah, I know the markets are very cyclical, right? Rotating out of one sector into another. We know that we're rotating out of tech, we're rotating out of semiconductors, and there are some other places that I feel I might be putting my money into here, within the next couple of weeks. So I spoke last week on 3 sectors. I told you guys energy, consumer staples, and healthcare. So let's check out how they did this week compared to what I thought last week and how these markets are looking. So as we look over the XLE, we're going to start off at the higher time frame. We're going to start off on the weekly. Yeah, see, I was saying last week, I was looking to see 82.68 become that support level, and I think I got that, right? 82.68 is somewhere around here, somewhere down in this bottom section here. I'm just going to draw a little box right there, but I was expecting this area right here to be support. We ended up getting that, and I want to show you guys on the daily exactly what that looks like, because I actually really like the close that we got on Friday. We ended up getting a nice bullish candle here off of this wick candle. This day was, the bears were out, man. They were trying to push this thing down on Thursday, and the bulls came fighting back. We ended up getting a nice little doji candle, ended up getting another bullish candle on Friday, and now I'm thinking, hey, this might be a little spot where we might end up bouncing off of here, definitely filling that gap and working our way back up to that 89.90 zone. I might end up taking a play in some of these energy sectors this week. So this is definitely one of my preferred sectors, definitely going into this week. I do like what I'm seeing out of here. Moving on to consumer staples, we'll go back to the weekly. And really, this is, I was saying I really liked consumer staples here. But then as I'm looking at this, I see that we're still kind of working within this zone here, right? Anywhere in between 74 to 72. And it just hasn't broken out of that zone. I do believe that the major levels are up in the higher 70s and the lower and somewhere around 68, 67. So the fact that we're kind of trading in between these zones, I'm not really sure which direction it might take. Because at this point, you can basically say, hey, it already tried to break that high before, and now it's continuing to slide down. So I kind of want to see if I can either get it back when it comes back into the 67, 68 zone. If not, I do expect it to bounce here and get that 77, but it's not an attractive play for me. It's a 50-50 play. I don't really see any reason for me to get involved. We can zoom into the daily just to show you guys, but basically just a lot of choppy action. No real breakouts from the zone. You can kind of see the low of 71, high of 74. So I do expect it to kind of continue to bounce into this range unless something significant comes out in the sector and makes this thing actually want to move. Moving on to healthcare. I do still like healthcare. And remember, I was telling you guys, I wanted to see if I can get it into that 125 price range, man. I didn't think I was going to get it. because I was seeing a lot of these downside wicks. So I was thinking at some point we would get that bounce. So we finally got that huge bearish candle to the downside. So right now it's sitting at around 128. My target zone is here somewhere around 125. I can potentially see it dropping down into the 119. So this is definitely on my radar this week, just to continue watching it to see where, where it falls to if it ends up wanting to bounce. I thought this candle was going to be huge last Friday and ended up rejecting all of that. I actually didn't take that trade, so I'm just going to get that out of there. But I was potentially thinking about it. The reason that I did it is because it's not really in that, it's not really in a zone that it wants to bounce from. I'd much rather see it come down here to this 125 zone, and you can see kind of how many times it's bounced off the zone and rejected off of here and caused pretty big spikes in price. So that's basically what I'm looking at. A lot of times when I'm looking for my entries, I want to find support, and I want to take those entries near support so I can get the biggest moves in the range. You see what I'm saying? I don't really like trading in the middle. And as you guys continue to watch my videos, you'll probably see exactly what it is that I'm talking about. Last week, I also mentioned that I wasn't touching tech. So basically anything in the QQQ was pretty much off the table. And now with Nvidia posting great earnings, I actually kind of do like the semiconductor sector, but it's still stuck in this range here. So I'm pretty much waiting for it to either come back down to this 388 zone and show me some kind of action here that I like, that will show me that it wants to continue to move to the upside. So I'm pretty much just waiting on that. So if we can get that this week, I'll probably take that and ride that back up to the 430s. If not, I'll probably just leave it alone and kind of just see, what's going on. This is a weak market, so I am being very patient, very observant of what's going on in the market, right? I want to be confident that when I enter in some of these sectors, that it can break away from SPY, or if SPY catches a bid and starts moving to the upside, then I'm catching and riding that wave, right? So those are my predictions for this week, man. That's all I have for y'all today. Check back with me next week, and be sure to hit that like button, subscribe if you're rocking with the content, and let me know y'all plays down in the comments, man. As always, it's your boy, Mr. World Shoe. Don't do anything I wouldn't do, and remember to always protect the capital.